how are you doing? Behavior restrictions under coronavirus pandemic are getting easier now, and domestic consumption of inbound tourism is growing, and foreign visitors centered on wealthy class has increased due to easing border control measures. And there's some stores that earn more duty-free sales than that before the start of coronavirus pandemic in this December, and domestic tourism demand is recovering, and some hotels provide more pricey room than that before the start of coronavirus pandemic in Japan. The Japanese government removed the ban of personal tourism of foreign visitors on 11th in this October, and Japan started providing visa exemption for short-term stay in Japan for some countries. And Japan touring industry comes back to life. And recently the news that foreign real estate investors are hunting for Japanese lands and Japanese real estate properties has been talked about these days. And recently real estates around Tokyo have been targeted by foreign investors who are mostly from Asian countries such as China, Hong Kong, and Taiwan and Singapore, and Japanese real estate agencies detect this demand and establish a website introducing a real estate information around Japan with multiple languages for foreign investors. So what we have to pay attention to the most is the type of properties that they are purchasing in Japan. So they are targeting not only residence type property, but also logistic facilities and nursing home properties. And from their investment style, they invest to gain long-term return from properties. So there are actually some points that Asian wealthy investors are attracted by the Japanese properties. Japan is known as a country with low country risk. A country risk is the one that may lose revenue or profit no matter whether or not a business partner has a certain commercial risks due to the change of economy and politics and social environment in the country where you're doing business through investment and trading. And for example, a political system of a country collapses because of downfall of long-running dictatorship in a country, or rapid change of social situation happens because of inter-ethnic conflict in a country. So these incidents can be said that a country risk is very high. During Iran and Iraq war in 1980s, an oil plant which was under construction in Iran by Mitsui Group was destroyed by the influence of this war, and more than 50 billion US dollars investments was down the drain in a moment at the time. So high country risk can be connected to low trustability of a country where you make an investment. So in terms of this point, Japan is a precious country in the Asian region that is evaluated as A by OECD, that indicates the lowest level country risk. So according to the country-wise country risk rating surveyed by OECD, Japan and Singapore are the only the countries around the Asian regions rated as A-level country risk, right? So low country risk is considered that there is a low risk that real estate values may sharply go down due to uncontrollable external factors. So, however, Japan is one of the most well-developed advanced countries in the world. So it is unrealistic to desire that a construction boom arrives in Japan again, and it pushes the real estate values explosively, as that happens in the emerging countries recently. And you can count on the huge return from the low risks, but there are still attractive properties in Japan. Normally, there are obstacles of regulations of law in a country whenever investors purchase properties or lands in there. So in Australia, a law regulates the only new properties and lands are the properties that foreign investors can deal with. And in Singapore, the government prohibits foreigners from possessing domestic properties and lands by law. And in Maldives, the government doesn't accept possession of domestic properties and domestic lands by foreigners, basically. So they provide leasehold for lands and properties instead for foreigners. So but in Japan, the Japanese government doesn't set strict regulations related to trading the real estate for foreign investors with law. And then on the contrary, the Japanese government doesn't impose additional taxation to foreign investors in terms of real estate trading. So for foreign real estate investors, Japan is one of the easiest real estate trading country in the world. There are, of course, disadvantages in the Japanese real estate market. Like the price of Japanese real estate has gone up continuously in recent years. But even in this situation, the risk that you can't collect profit from the principal investment is very, very small compared to that in other countries. And real estate yield rates in Japan now is 2.66%, which is stable average percentage. And there are still rooms to attract foreign real estate investors in Japanese real estate markets. And it is said that the average real estate yield rate in China and Taiwan is from 1 to 3%. On the other hand, real estate yield rate around Tokyo is from, 3 to 10%. And in Japan, the price of a house that people buy is said to be mostly 5 times more than the average annual income. But in Taiwan, the people averagely buy a house that costs 16 times more than average annual income. So if real estate price increases by the influence of commodity price hike, it is impossible to expect high yield rates from property investment. Even in the situation where Japan's country risk is very low and recognized as A level by OECD, and there are still some risks to be accepted prior to real estate investment in Japan. So needless to say, Japan's location is where there are so many earthquakes in the world, as you know. And this is the risk that you firstly recognize when you start making an investment for real estate in Japan. So it is very important to consider your investment decision with the risk of earthquake when you make a long-term real estate investment in Japan. So there's so many rooms left to think about the risk of earthquake and natural disaster, even when you consider the investing properties located in the Bay Area that is close to the center city of Tokyo. So it is quite natural. It's quite natural that you always make sure the region that can be estimated the size of earthquake and real estate damage by earthquake. At the same time, you look for the properties in Japan. So as one of the risk hedge of your investment, you also consider selecting insurance for the earthquake and for the damage of properties by earthquake that may happen in the future. So first thing first, prior to real estate investment in Japan, you should find a property with reinforced concrete construction that fulfill the legal earthquake resistance standard requirement. So the new legal earthquake resistance standard says the building are required to stand firmly with no corruption even affected by wavering of earthquake intensity 6 or 7. So the earthquake intensity 7 is the max that a seismograph can detect. So a building with earthquake resistance, even affected by earthquake intensity 7, is quite trustworthy for your investment of the building or real estate. So Moreover, when you purchase a real estate in Japan, you should take out insurance for earthquake. The insurance that requires you to make a payment every month, but this is a must investment and this is a must expense. And the risk that building is destroyed due to earthquake is realistically much bigger and much familiar for us than that in other countries. So if you can succeed in growing a real estate business in Japan, this will not become burden on your this will not become a burden on your financial situation. So this is the must, I think. This is the most important risk hedge that you must possess whenever you purchase a real estate in Japan. The matter of declining birth rate and aging population society is also an important factor to consider when you purchase a real estate in Japan. So Japan's continuously declining population trend is really as serious as this factor influences the Japanese economy, as you know. So of course, people tend to gather in a big city such as Tokyo and Osaka, and it is really unthinkable that people's demand in real estate in a big city center drastically reduces. But as an overall trend, real estate trend is more or less affected by declining birth rate and the aging population society in Japan. So in terms of this change, in terms of the change of real estate demand, you always have to remember the factor of declining birth rate and aging population society. So if this factor accelerates, you can easily come up with the scenario of increase in single household of old people. So for that reason, you also need to have perspective that there is a possibility that one room type apartment for old people's single living may push the majority of real estate demand in Japan. Seeing forex fluctuation risk is also the important risk management when you reach your hands to foreign real estate investment as a matter of course. Undoubtedly, when you purchase a real estate in Japan, you have to pay money with Japanese currency. And for the payment of the property with Japanese currency, you have to check the exchange rate between your country's currency and Japanese currency to reduce the exchange risk as much as possible. So you have to make a financial plan for real estate investment based on Japanese yen currency as long as you make investment for Japanese real estate in Japan. So which means your financial plan for investment fully depends on the Japanese yen currency. So there is a certainly risk here. So as you know, in recent years, Japanese government has been aggressively taking monetary easing policy. And thanks to that, real estate price is sharply going up, but the real estate price hike caused by the yen depreciation is really localized. And there's a polarization between the place where property prices very high and the place where property price is very low depending on the region in Japan. So a big city properties prices goes really up, but when you go to a countryside inside of Japan, you may be surprised with a low property price. Although Japan's country risk is very low and evaluated as A level by OECD and property prices going up, centered on a big city by the influence of the yen depreciation this time. Japan's average real estate yield rate against investment is 2.26%, which is not really good one compared to other advanced countries around the world. And there are also a social problem of declining birth rate and aging population and the risk of natural disaster of earthquake. So there are always risks to manage the property in Japan to get reasonable return from the principal investment, and how you can make a lot of profit from your investments all depends on your business ability, on how you can manage your property to make a system to earn money. from investment.